Welcome back to Java, and thank you kindly for joining. It's November 6th, 2025. Tis Thursday, in the midst of a very volatile week, which is proving to be a little bit of a pivotal point here. So we'll talk a little bit about what's going on behind this. We've got the inflation versus the easing market between the central banks and what they're doing. We could be on the point of a break, also with the government shutdown still continuing right now, day 37 at major stalemate. So we've got a lot of turmoil, not just in the markets, but also abroad. So let's get started, as always, with what's going on in the markets. Now, we did have Discord discussion last night, brought up quite a few very interesting points, counterpoints to look at what is happening here, and what that really defines is that we're at a turning point right now, because if everyone has these counter views, could go either way, and there's not one that's wrong, there's just going to be one that wins out. So we've got fear greed meter at 24. This is extreme fear territory. I believe it's got a bit more to go. Now, what we're watching this morning is a bit of a recovery. So let's talk about this. The first thing is we've got the 10-year yield, 4.138. It's rising. That means there's a sell-off in the bond market again. It's flowing back into equities, at least on this open. The relative strength of the dollar was a bit higher, seems to be pulling back just a slight bit. That also gives for a shift back into equities, risk on, as well as cryptocurrencies. So the next thing to talk about is the cryptocurrencies did have a plunge. Bitcoin did hit below 100,000, but it is recovering on dip buyers. Now, as I said last night, this is a bit of a lead indicator of late of, in particular, the NASDAQ and tech sectors, cryptocurrencies, as they are leading what is going on. So Bitcoin back above 103,000 this morning, and while it's taking a bit of weakness right now, it is also going up in the tech sector, which has been for some time driving the United States equities, or stock market, if you will. So with this, stocks up a bit, recovering a bit, the volatility index down. Gold is back above a $4,000 limit, and I'll talk about that again in a bit, as well as oil just below 60. Now, this is kind of a critical price here, because the price of oil is fluctuating right in between whether the drillers are going to make money or not. So if you're not going to make money on something, you're going to stop. So as demand is dropping, they will also pull back, and that could be a longer term actual increase for that price, but right now still showing a bit of weakness. We've got the futures saying this is kind of level. They're quite flat, actually. Silver looks like the best one at the moment, but that's a bit of safe haven as well as industrial. So putting all of this together, it appears that it's going to be a bit green on the open, nothing major. This is, of course, barring headlines, because we're a very headline driven market. So on open, a bit green. However, I expect after the first hour or so, we could see some weakness. There are no guarantees in this. You have to do your own research, of course, but it looks like this is another case of where we are continuing to have the dip buyers, and the institutional money is still liquidating into them, to where it causes a bit of weakness in the midst of the day, and then does kind of recover toward the end. Now let's look at some of these drivers, as well as some specific sectors. The daily driver for today is still fear, left over from yesterday, but these dip buyers that we're talking about is currently pushing them up, at least for the open. We had the Bank of England was to come out with a rate cut announcement. They have chosen to decide to stay neutral. So at this moment, no cuts. They've got to watch the other side of inflation. Now, in the United States, which is the largest market in the world, we've still got this government shutdown going on. Now, they just announced this, a huge announcement, some of the fallout And this is because the FAA, Federal Aviation Administration, is federal, and they are going to be cutting roughly 10% of the airline schedules. We're coming into the holiday season within the next couple of weeks. So with all of this, we've got the airlines are shooting up in a significant way because people are going to be piling into the flights that they can get. So they're expecting that they're full. Well, the news on this is that they're already quite a bit at max capacity as it is. So I expect this surge to probably pull back eventually, possibly not today, but it's not going to be the increase in revenue that they are believing could be a good surge for them short term, though. So we've got a filibuster on the line as well as tariff refunds. Now, this is in the legal system at this point in time. I believe it's another distraction from the larger picture of what's going on here. So don't count on these to really come up things. I understand they can be big decisions. Don't get me wrong on that. I just think that in the overall market, overall, these are distractions from what they're going to do anyway, which is inflate. So inflation will continue. We're not out of this yet. So there will, at some point in time, whether you call it a crash, whether you call it the extension going in, where deflation will take hold. But we're not quite there yet. And they're not going to allow that to happen because too many other things will occur that they are not ready yet, is the short of that. So with all of this, what we would say is continue to own real assets. Real assets. And what you do not want to own is debt. And I don't mean debt that you're making some up for. Instance, if you've got some debt that is building your money through business or real estate, what I'm talking about is short-term unsecured debt is the absolute worst. For instance, credit cards, or if you have to purchase things using a firm short-term pay, the likes of that, the interest rates are going to suck the wind out of your wealth. So get out of debt, that type of debt, short-term debt, high interest debt, as soon as possible. It should be a focus. We've also got possible housing weakness coming forward. Now, housing is only one section of the real estate market. We've got the commercial section is already weak, but it's leveled out and stabilizing. Housing weakness will be local, meaning that it could be in specific areas, which could also mean a boom for others. This is opportunity if you are in that sector. So it doesn't mean that there are not opportunities. In fact, the big reason I'm bringing this up is we are on that verge of where major opportunities are coming out forward to where you can make the wealth for the rest of your life, possibly what they call generational wealth, enough that you couldn't spend it, you're going to be passing it down. So we'll begin looking for those opportunities, not necessarily getting in them yet, but being ready for when they come up. You don't want to be caught not understanding whatever sector it is that you want to be going into when it hits. It will be rapid. We've got the Fed, this question about the Fed cutting interest rates with inflation running so hot. So this is the bigger picture. They are going to continue their inflation regardless of cutting the rates. We spoke about this last night. The Fed controls the short end, which means short-term interest rates only. The 30-year, which affects housing, and the longer term is dictated by the market. So if you're going to go into the purchasing the bonds, the 30 years, the 10-year, we watch that 10-year yield, which is going up rapidly at this moment. So that is going to be the driver. And that is what is really going to dictate what happens here. The Fed can only control so much. So with the calendar, we're still with the government shut, not getting their formal reports. So they're saying kind of working in the dark, but not really, because we look at multiple factors. We can look at the outside of this and see where things are going and not just go simply off their reports, which are not necessarily factual in the first place. I'll leave it at that. So we're getting a slew of Fed people, I'll just say, coming out and speaking today. They can affect the markets because it's the expectations of easy money and how rapidly we're going to get it in the future. We're going to get it for sure. That's a certainty. But how soon are we going to be getting all of this easy money that they've got to prop up this market? And when are they going to cut and shift to the new digital system? So employment is really what is in the focus. We're not going to be getting the real employment numbers that we're looking for tomorrow, but they're looking at layoffs and the ADP, which is independent. So highest in October since 2003. And the interesting part was this was warehousing and technology sectors that led this. So the warehousing and technology layoffs are also the ones targeted by artificial intelligence. That is not a coincidence. So going back to the FAA, they're talking about the flights that they cut from the airports because of the shutdowns. They're talking about 10%. So if you are looking at traveling for the holidays, look for alternate traveling plans now. If it's something you can drive, look at renting a car now or getting your train tickets because those are going to surge. And just want to warn you about that. I did spend the day revising some travel plans of my own. So going on with this, we've got some restaurants coming out talking about their stability or rather instability. McDonald's came out with a beat that their stock is coming up. However, they are warning. What are they warning about? Well, Denny's could possibly be taking private. Pizza Hut may be for sale. We've got this kind of merger acquisition of the small banks happening now in restaurants because what they're seeing is the lower end consumer is feeling a lot more pain and not spending. We've been speaking about this for a while. So no surprise here. But what we're seeing is definitely a pullback in discretionary spending. And there is a definite imbalance between lower income and upper income, middle class being shoved one direction or the other. You have to choose now which one do you want to be with if you're in that middle and just act accordingly. Stay here if you need advice, need some kind of bolstering for that, if you will, not financial advice, but we can kind of gauge what is going on here so there's less shock to our systems. So Peloton also issuing a recall. So that stock will be down this morning. The Tesla pay vote for Musk is happening. That could affect Tesla. And this is what I think is a little more interesting and what I want to leave you off with. The gold rush is over, but October's flash crash is just what buyers needed. So I believe this is temporary. Gold is commodity. I do believe that even though there's not going to be, nothing goes in one direction. It does go up and down, has corrections, but gold, I doubt, priced in US dollars, is ever going back to the $1,000 or less level. I could be wrong, but that would be massively counter to what we see is going on, massively counter to what they're producing. We've got banks, central banks purchasing hand over fist still on these dips. They are purchasing gold, commodities, even cryptocurrencies. So we'll keep an eye on this. We've also got the United States producing record amounts of oil, putting energy company profits at risk. We spoke about this too. There will be a point where they're not profitable and they will be pulling back, but energy in the long run will still be in need. This will push more likely nuclear as well as other alternatives. So, speaking of power, I want to bring this up. Two types of power, not just energy, but also political. We've got a new, what they're calling dark sky law, forcing American homeowners to turn off their lights by midnight. You can guess where this is happening. Of course, it's happening in California, communistic California. So they are dictating when you can have your lights on, when you can use your power. There are a lot of voices about the safety concerns of this, people walking out at night, being able to see intruders. So we'll see how this goes, but we can expect a little bit more of this coming out in the future. So with this, wish you all a wonderful trading day, and until I see you again, resist.